What's good, all my people? What's good? What's good? It's your boy TBT, aka the Brainless Trader, and today I'm just gonna be going over a couple of my trades that I took this week. Wanted to get in here and at least post a video about what I've been doing this week. I've been looking at low resistance liquidity runs, specifically those that come off of the breaker, and trying to match those with the new week opening gap concept from ICT. So I'm just gonna go from the higher time frame and just talk to y'all about what I was looking for this week, and then kind of break it down to the actual trades that I took. So obviously, if we just take all this lipstick off the chart, as we came into this week, we had already kind of ran off the highs. There was a previous high here that we had ran up past, and we were kind of trying to wait to see what price might do in this area. Um, so from there, what I was kind of focused on is just seeing if price was going to sustain that run against, after having ran off liquidity, trying to see if price would sustain that price movement going down. So as you see, when we zoom in, price began to start trying to approach the most recent lows. And as it did that, that's when I tried to get in. Let me wait to say. That's when I tried to get in and look for potential bearish trades. Now, just on this higher time frame alone, you can kind of see that the lows that I would be targeting are here, these relative equal lows, and these relative equal lows, which you can see prices kind of taking out. And I'm gonna just try to lay up for y'all why I saw it that way and how you can see it that way. So the new week opening gap concept really helps you to align with price. One, because it's kind of like a 60-day, 4 week to 60-day look back that kind of tells you what price is doing. Essentially ICT uses it to determine whether or not, to be an additional confirmation to determine whether or not price is consolidating or whether price is actually going to be starting to create those low resistance liquidity runs when price runs away from the new week opening gap, and obviously consolidating if it's hovering around the new week opening gap. So just from that concept alone, if we go to the 4 hour, we had a new week opening gap over here, probably the most recent one that I've been able to find. And for a long time, for a couple weeks, price was basically just hovering below and above it, right? But then once price created that true breaker, which we'll get into, price then ran away from this opening, new week opening gap, and started to create that price action that you like to see when you're seeing, the low resistance liquidity runs. So if we zoom into the time frame that I have the breaker on, let's go to, I think it's like the 15-minute. Yeah, I think I have a 15-minute breaker. But you can see it on this 30-minute chart as well. Yeah, I said 15-minute, but I think this could be a 30-minute anyways. Let's just zoom in here to this price area. All right, so what we have here is essentially, let me see if I can, this is as big as it gets. All right, what we have here is essentially a most recent, let's see, a high, a low, a higher high. If I can move this out my way, right, which creates the breaker, which is the lowest down closed candle, which right here we have 3 consecutive down closed candles. And so I would allow this to make up my lowest down closed candle, the breaker. Now, if I go into the hour chart, most likely that area is 1 candle. So it's 2, essentially it's this candle, but going to that 30-minute, 15-minute gives you those 3 consecutive, which I like. Now, why did I choose this area as opposed to maybe this area? High, low, higher high, lowest down closed candle. This could have been my breaker. As you see, they kind of align within the same area. So when you run into that issue, a lot of times when I'm trading, I'm looking and I'm like, well, which one? A lot of times I'll choose the highest one just so that I can really truly give myself the one that I'm like, okay, if price goes above this one, then pretty sure it's invalidated, right? But if you see the high of this, lowest down close consecutive candles, and the high of this one, it's literally like almost the same. So, you kind of go with whichever one you're more comfortable with. I think I like this one just because it's kind of a immediate high, low, higher high. This is the breaking action, price breaking these traders who maybe had their stops up here or up here and then running right immediately back down. You know what I'm saying? So I like this one the most. Then you see, okay, where is the fair value gap across from the breaker? And now you have your fair value gap in this area. Um, I've got these here because I'm going to show you all a little bit of the market maker model, how you could frame it in the market maker model as well. But obviously, you can see that with this area here, if I can find my little fair value gap thing, you basically have a nice fair value gap that's directly across from the breaker, right? So a lot of times I just like to go with the one that makes the most sense to me, and then I just like to see where price reacts off of it, which you can see the breaker price did not exceed the breaker, and then price basically fills in this fair value gap perfectly. And so the question is, okay, well, I thought you wanted ICT's concepts, I thought you wanted it only to fill in, up to the midpoint, and if it fills past the midpoint, then it's invalidated. Well, not necessarily. ICT says that you just don't want the candles to close above that fair value gap or above that breaker, right? So as long as we got those candles closing within the zone and you see price basically painting perfectly, up to the top of that zone, right? Not breaching it, but perfectly touching it, and then immediately running off. That immediate runoff is really your confirmation that something good is happening in the direction that you're looking at. And so obviously with pairs like GU and GJ, you're going to have a lot of that back and forth. You're going to have a lot of that manipulation. So you have to be nimble when you're looking at price just to make sure that you're on the same page, right? But I'm comfortable seeing this. And then, you go down on the lower time frames. Now I got the confirmation of my fair value gap, my breaker. And then you begin to want to see, okay, where is price going to move off of this? So the trades that I was able to take this week, I don't think they were within the breaker. I think they were afterwards. So when you look at ICT's market maker model, right, you typically started off with the breaker, which is that market structure shift, right? Obviously, looking at the higher time frames, we had that run on liquidity here, and then the formation of the breaker is the beginning of that market structure shift, right? But then you want to then see, okay, what's going to happen as price runs past that breaker? Does it retest the breaker? Yes, it retests the breaker. Okay, cool. Now, this would be our first area, our first leg of distribution, right? Then you would be looking for essentially first leg and then a second leg of distribution, right? Which these both come into an area that could be considered the second leg of distribution. And I think that the second leg is where my trades took place. Okay, do I have my orders here? Let's see, where they at? Where are my trades? Oh, you know what? I need to log into the darn, yeah, let's connect this. There we go. Alright, so yeah, my trades, I didn't take any here because I didn't actually, this is last week, right? So now this week, as price goes into, this was Friday, now this is Tuesday. So let's go into what these are. For me, I'm just using these little things to show areas where price ran liquidity, right? So if you've got your first leg here, and you've got a large fair value gap here, which I'm assuming I'm putting this on the hour. Yeah, look at that. So framing this in the hour chart, you got your first leg of distribution that comes right off of the breaker. Then you have a large fair value gap that forms. And within that fair value gap, this is your consequential encroachment, the midpoint of that fair value gap, right? And essentially last Friday into this Tuesday, I'm looking at where price basically runs off liquidity here, right? Price runs liquidity, and then that kind of enters me into my model, which is just using the breakers, right? So now I'm looking for another breaker. Can I get a breaker to form on a lower time frame that would allow me to get into a solid trade opportunity? And I was able to find it on the 5 minute. So let's zoom into that. Now, mind you, this is the hour fair value gap Price doesn't go across consequential encroachment. And so that's an additional confirmation to me that I can now, after this runoff of liquidity, buy side liquidity here. Now let's look for my model again, me personally, the ICT model that works for me, which is identifying those breakers after a run on liquidity and then using price, retesting into those breakers to get me into trades, right? So boom, here goes another nice breaker. And when you find that run on liquidity, right, to the opposite side. So after this run on liquidity, right, I want to identify my areas of sell side liquidity that could become, areas that I could take a partial at. And then my ultimate target, is way down here at those higher time frame lows that I showed earlier. But essentially, you got the same thing: high, low, higher, high, lowest down close candle. Let's zoom in. Lowest down close candle. Now we have 4 consecutive candles. So I'm using the high to the low of those 3 consecutive candles, which the third one comes below this last one. So I'm using all of it, right? This is my entire breaker zone. Now, where's that fair value gap that forms across the breaker? There's a couple of fair value gaps here, one here, right? But if we look on the 15, maybe that area would be a little bit larger. Okay, boom. So you have your true fair value gap. This one right here that you really want to be looking at is the largest one. It's the one that, essentially is the one that's directly across from our zone, which you could also say, oh, this is one too, but, I'm going with the one that is most likely aligned with the order block here, which would be the highest up close candle, which likely is, if we just use the highest up close candle, you could use this one, right? This is the order block. So when these things form, you usually should have all of it. You should have an order block, you should have a breaker, you should have fair value gap, right? So this order block aligns with having this fair value gap just barely below it. It's across from it in a way. Then you got the breaker here. So it's never going to look the same, but you're just trying to see, if you can identify the area, okay, what does price do? If price reacts off of it, then you got something good, right? Obviously, if price doesn't react off of this area, then you're going to say, I'm not taking this trade, right? But as you see, price comes up, doesn't go across mean threshold of the order block. Now you got price running back, essentially, into or across the breaker, which now you could say, okay, well, price closed above your breaker. Wouldn't you say your trade is invalidated? Well, you got to see what price does after this, right? So if we go back down to the 5, let's see what exactly happened and why it makes sense to continue to stay in the trade, right? So price barely closes above the breaker, but since you have this nice order block up here, which I just showed you on the 15-minute, let's say this is a 15-minute order block. So I know which direction I'm looking at. 15-minute order block. Right, then you've got the breaker zone that price essentially just barely closes above, but now you got to remember, okay, where was the fair value gap zone that I was looking at? Fair value gap zone was on the 15-minute, and if we were to look at this in its entirety, I don't believe price closes above the midpoint. We got to see. So you got to use all of these to your advantage to see, if you're really painting the proper picture to get into a trade. So using my fib, I can go across that entire zone and identify my midpoint of that fair value gap, which is that 50% area. Okay, so you got something. If you're trading this live, right, at the time, you're like, well, price just barely closed above the midpoint, but it doesn't close above the entire fair value gap zone. So as long as you can get some nice volume back down to the bottom of this zone, right, then you can say, give yourself a reason to get into a few trades. Now, as you see, my executions on my chart are spread across that area, right? So I saw price trade past the breaker here. I took this trade thinking, okay, we're getting ready to run past the breaker. Then you see price trade back up into the breaker and the fair value gap and run off. So I'm like, okay, yeah, we really in. And then I think I had my stop set here and I got ran out by this runoff of this area of liquidity right here, right? So that's what happens in GU and GJ a lot, is you're going to get that manipulation before you can get that true runoff. But as you see, price doesn't run past that fair value gap, doesn't run past the order block, runs back across that breaker that we had, and now you have reason to believe that there could be some sell side action. Not to mention that you get another breaker that forms here: high, low, higher high, lowest down close candles, these three, from high to low. Boom, you got another breaker, and you got a fair value gap across from it, which then is where I entered another trade here, seeing that price was getting ready to go down and respecting this area, which I believe this is on the 3 minute, a 3 minute fair value gap, if we're looking. And here it is, 3 minute fair value gap. Price doesn't close above it. So you see, I'm literally just looking for breakers in the market. And when price starts to unfold like this, right, when you see the respect of the fair value gaps, you see the respect of the breakers, price really running off, then you have your low resistance liquidity type setups, right? Now this is not the lowest resistance liquidity, right? It's still choppy a little bit, but you can easily identify these nice areas to enter these trades. And you got to look at low hanging fruit. Obviously, I had my my targets here, but I took my profits here, just seeing that it was getting ready to be about 12 o'clock, and I didn't think nothing else was going to happen. So now going back to our higher time frame, framing this in the market maker model, right? I entered basically on the second leg, looking for a break in this liquidity. And what ended up happening is I took my profits here, and then the next day in the London session, price then gave us another low resistance liquidity setup, where it essentially during the Asian session crossed into the London session, you had a nice fair value gap that formed here on the 3 minute. Let's see if we can find it. Let's zoom into this area. So essentially you have your Asian range, which is my red zone here, and then London kind of runs into that, starting here at 2 a.m. You get a nice fair value gap to form there, and then price essentially doesn't close past it. And so as you see price just kind of cascading down, you know that you're on the second leg of distribution. You know where your targets are at. Price runs past my previous target and runs to my ultimate target of the sell side liquidity that was on the higher time frame. Now, where I messed up this week was on Thursday or Wednesday, looking at this, thinking that this was a run on liquidity, which technically it was, entered these trades, and then immediately got ran out. So everything that I made on Tuesday, I gave back on Wednesday. But, as part of it. And price ultimately does end up running to the higher time frame target, or almost getting there, if we go back to look at our higher time frames. So that is the way that I was able to execute on a few trades and get a couple things right this week, but also kind of got a little bit too interested and should have just took my money and rolled off into the sunset for the weekend. But I just wanted to show essentially how you could identify breakers and use the fair value gap in market maker models to identify those low resistance liquidity runs and those type of entries within the fair value gaps after you got that confirmation of the breaker and the fair value gap and the order block. Within understanding, you have your first leg, your second leg of distribution, looking for an ultimate target, right? Like when you can frame it and have all of that confirmation, like that really helps you to have successful trades in the market. It really helps you to feel confident when you're taking these trades. And then the only thing is just taking your money and sitting down, because like I said, when I thought that I saw a run on liquidity that could end up getting me where I wanted, I did see it, right? Like if you're looking at this 2 hour, like I had the right idea, but I essentially had a larger run on liquidity that tagged me out and then kept going past another target that I could have identified. So, no excuses. It happens, but we're getting better every day, and that's what we're going to continue to do as time goes on. So, with that said, that'll be the video for today. I will probably see about making I probably won't be able to make a market overview video for next week, but as far as my thoughts for next week, I think that we will get this area of liquidity. So long as price continues to, um, you know, run back into fair value gaps so they can launch itself deeper. I think we're kind of close to this anyways. But if we did get that on the higher time frame, that is where I'm interested in the overall, right? Because on the higher time frame, if we take all this stuff off of the chart, and the executions as well, because the arrows are wild. All right, take my executions off of the executions is what I needed to move, not the orders. Yeah. Okay. Boom. So, like, just understanding the higher time frame, this area is an area of significant structure to me. That if and when price does break that area, this area of liquidity, I would be interested in lower movements. And I know that seasonally, the month of May is typically a bearish month into June or mid June, right? So I would be curious to see if price does run off this liquidity here, and trying to continue to use those new week opening gaps and things like that um, to help me to identify areas that potentially, could be bearish opportunities. Um, so essentially, that's a breaker, right? If you're looking at it, you got a high, low, higher high. You could either go from this high, low, higher high. I mean, they're essentially both breakers. The break zone would be in the same area. I'd probably use this one. It's the larger candle, and this is the lowest candle. But yeah, I don't know. High, low, higher, high. Technically, the lowest down close candle is, I think, this one. So I would use this one, high to low, and then you would just want to see what price does. Going back up into that area, potentially to try to get maybe this area liquidity. But I don't think it's gonna go that far. I think you probably get, one of these areas, maybe this. There's a volume imbalance here that would be nice for price to come back and target too. Oh, also right here. So the month of May, the rest of May, we only got a couple weeks left. Potential continuation in the downside. We'll see. But those are my thoughts for the week. I won't go over all these pairs. I ain't really touched too much. I did have a GJ trade, but I ain't really touched too much of any of these. Now, this is actually kind of significant in gold, where you have a nice breaker, high, low, higher, high. The lowest down close candle would technically be this. If I can get rid of all these areas. Lowest down close candle would technically be this. I gotta change the coloring, but now that price has broke it, you're thinking maybe price will run off and get this. You got a nice fair value gap across from that breaker as well. Could potentially be some downside movements, maybe to continue to get these areas this low, maybe this low. In gold, just thinking of using the breaker as a way to identify that market structure shift. So I will be paying attention to that now that I've seen it. Fair value gap across from it. I would expect price to trade back up into here, and then depending on what we see, could potentially have more downside movements. DJ, I really would continue to expect higher movements, especially now seeing that you see prices basically ran into this fair value gap and is about to make a new high. You got some liquidity here and some fair value gaps above that you could target. It's pretty much been bullish and doesn't look like, if it were to be bearish, I'd be looking for it to break like this breaker zone here, but it doesn't even look like it's got time for that right now. So I would be bullish for now in GJ, although the seasonal tendency is typically bearish, but we're opposite of that right now in the technicals. And then I've just started to look at oil. I don't have any comments on this. I'm just learning, so more on this in like 3 or 4 months. But that's all I got. So hopefully this was a value add for y'all. Appreciate you for watching. Anyone who's watching or still watching, and we'll catch y'all in the next one. I think one of the next videos I'm gonna try to do. We tried to do it last week, but I never clicked the live button. Met a dude named Charles on Instagram that was just asking to look at the charts and wanted to look at a few ICT concepts. So we made a video just for beginners, essentially to help you identify some of those simple PD arrays that ICT has that help you to identify like a market structure shift, or even just looking at what is an order block, what is a breaker, how do you use it, how do I use it at least in the market, right? And so we had that video, and we're gonna probably try to make another one. Charles was a really cool dude, and we just been staying in contact, and just trying to help as much as I can, So hopefully that video will come out, and that will be something that people can watch. And those of you that are beginners, or are just now finding ICT's concepts, hopefully could draw something good from that video as well. So maybe in the next couple weeks that'll come out. We just gotta go over it again because we gotta find time to record. So but yeah, that's all I got. So hopefully y'all have a great day. See y'all. Let's end stream here first.